What's up, guys? I'm Seb from FX Cartel. If you're here, you're probably interested in the trading market and specifically the Forex market, and you're in the right place because I've got 10 years of experience and a successful proven strategy. And I'm doing this video for you today to help you develop and improve your skills with my latest tips and tricks on the market.
Alright guys, so let's take a look at what the market is going to offer us. Just a quick reminder, guys, that you can get more analysis in our services. We cover a lot more pair, and that you can find all of these analysis in my private Telegram group, and the link is in the description. So what can we see for the foreseeable few days? It's May. And a reminder, May is bearish pound, and this is what we call a seasonal pattern. As a seasonal pattern, these tend to last the first 2 weeks of May, mainly focusing on the first week. So what does it mean? It means that this short that we got there, we really want to hold on to this. Okay? So we are not compromising this short by taking an early exit. We've already secured something. If we were to get stopped, we'll still be in a profit. As you can see, we've made a new high. We've clearly rejected, and this is what I call the reversal W. So those that have been members of my services know that for a while. This is something we noticed a lot. So you get a zone of interest like this, a zone of interest like that. And what you'll see is that we get an initial reaction. Most of the time we profit from it and we could already be out. But if you see further push inside and other confluence are still aligned, still on the market, it tends to give you the indication that we are going to grab a lot more liquidity. We've got probably, in this specific case, a lot more seller interested in this, and we usually see further downside. So this is the typical W reversal. I don't think it's a pattern, it's not double top or something. We usually push past the entry, which as a trader, if you're journaling a lot, I emphasize a lot on journaling. If you journal a lot, you'll see, maybe like me, back a few years ago, you'd be triggered out a lot on your position by BE, because you move your stop loss too soon, or you get stopped out and you see a big move, just to see if this could be the issue. Journal. So maybe you journal, you realize, yeah, well, every single time I get stopped out on a bigger move, it does this kind of W, tapped higher, I shouldn't be scared, and then end up doing a lot more. It's not that it's always the case, but often, more than not, it is the case, and especially on the gold market. So therefore, I'm expecting this to be reached sometime before the end of the day or midweek. And then what could we see next on the market? So if you take a look, the last push momentum is this. Why? Well, we have made a clear rejection of this area there. So it was a struggled area that killed a lot of the momentum. We broke past it, retested, broke past it, retested, and we've now secured this area. When we do this, we tend to see a new momentum to the upside, and the previous one is kind of dead. So you cannot, not dead, shouldn't say that, but it has slowed down enough, and it's a new kind of momentum. So you can start the few from there. You can very much keep the few from this area there. Absolutely nothing wrong with it. Okay, so don't get things I haven't said. It's a valid fib. But what I meant is that you can emphasize on this one if you're short-term trader, which is what we're gonna try to do. Short-term trading on the downside, because we are trading against the momentum. Why? Because it's bearish May. So bearish May. So potentially what we see, we've got 38 of the small one. Let me put a different color so we don't get things wrong. Okay. I've put a different color to the fib. Big 38 is near the break retest area there, and the 61 around here. So I do have an interest in this area right there, around the 61. 168 area is of interest to me. So it sounds like we could do something similar to this break retest area, so I do have an interest there. I've got a big 38 there, and it's 100 pips away, so this would be a backup zone for me, the big 38, which I would take on its own because I don't have really a good key level there. And this is the main reason I would go for it on its own, is if we reach the 61 there, and I would have that done. So trading style wise, safe trading, you could just go for the big 38 and pass on 61, wait for a bridge. I don't want to say aggressive, but if you want to be a bit more on it, you can go for this break retest. It's a strong move, and nothing wrong with it. The 38, however, is kind of more aggressive one, around the 170, but I guess something, so personally I'm gonna go for this, that 170, but on this one it's lacking trading. Why I'm gonna go for this personally is I'm holding on to the trade and I'm holding on to the short, so I'm kind of locking this trade nicely, and 170 is a break retest of my previous trade I took on the 170. I kind of always break retest the level I take before, especially if it not worked out the way I wanted. And so for me, for this 170 will be a B of the 170 short, which I'm still on, because in a risk minus way I can hold on to it. In this case, we took an L, and I'm not having anything strong for this kind of high aggressive account. We can't really reach 25% on the 170B psychological round number, but as part of my strategy, I'm going for it. So it's an area of interest, of course, there, especially if you get close to the trend line, but for this one, not so much. However, it's not far not far away from the 38. Okay, so it's more or less a big area like this. And if I was to see a bridge of the 38 where 169 provided, you could now get into 150. So I'm guessing based on this, again, one way you could see this. If this bounce, okay, then you go for the 61. But if this bridge the 38, then you could get the bounce from the 50 instead of waiting for the 61. So we'll monitor this, but as it stands for me, the break retest area is the 61, the one I'm comfortable going with a hefty risk on it. In terms of high, if you were to see new high, honestly, I don't think we'll have anything in the tank new high wise. We just moved 120 pips away. I guess I'll be okay with going on the high again if we were to see it, because we're already pulling back strongly from it and it's bearish me. So yeah, these are my next zone of interest, but I'm mainly, as I said, gonna wait for the 61. So what does it look like for our trade? So 61, entry on 61, right there. So let me focus on this. And as for the room we allow, it's a quite big area there, and it's a big move to the upside, so I don't need to cover the whole thing. So what I'll be covering is just the 50 pips toward there. So entry wise, the break retest level is around 167. and the fib was 168 point. So let me check. So something like this. IC market could do better than just a box. TradingView I know it's got a better, but it's just to give you a visual. I don't need boxes. Yeah, what I was gonna check is the fib, just making sure we get the right one. So this is the start of the momentum, and this is where it's going, and therefore, yeah, Fibonacci is 04. We're gonna go on the Fibonacci, just slightly on the 05. That's it, and this is what the trade is gonna look like. So now what we're gonna check, I'm gonna check if you get there. Where's 23? 23 is the 169. And 169 there, we're just gonna go below 169 to make sure we reach it. Again, we are against momentum, and I'm even gonna go 0.8, so just below the 0.8. And that sounds like a decent setup there. So I'm just gonna have to calculate. I think we'll have to risk 10k on this one. This next one, big. Yeah, that would be the main buy. If it's smashed, then next will be the breakaway test of the 167 right there, which doesn't need much to cover similarly. And same, target this, either the 23 or the next set of confluence, and that would be my level that's been smashed before, and that would be like this. So basically, if we're getting smashed there and we get there, we'll recover and we'll make a bit of profit. And if it works out there, it's making things easier. So this is the next trade, and let's see where we're likely to end up. Let me do quickly this. If I, however, going for this one, previous high, I think again I'll be. So if we go again there, it means there's a strong momentum, and maybe I'm gonna have a break at some point. So I'll be doing a smaller type of trade, just based on figures, this one, because we don't have technical at play to help us. I would not need to cover much, and something like this is more than enough, basically. And this is it, guys. Alright guys, so we're back on the charts. So we had a strong move to the downside as expected. We're following bearish May, kind of. The reason we are seeing strong downside is that we currently having some strong risk off environment. So gold is very bullish. Bank crisis is still very much ongoing, and it's going mad on the market. So the market is fleeing risky investment and putting all the money into safer investment. And this is pumping gold, and this is also strengthening the yen, which is helping our weakening of pound and the bearish GBP in May. So everything is kind of tying together very, very well, and as such we're seeing some strong downside. We've seen 300 pips move reaction. We reacted from the 38, we broke down. Not enough for me for a potential trade, and if you had gone from there, would have been smashed because it slipped past by 60 pips. As I said, we're seeing some strong risk off environment. Let me show you gold chart there. So as you can see, we are seeing a strong push to the upside on gold, and we're getting near some strong sell area. So what does it mean for our chart, for example, in this specific case? Well, gold approaching one of the strong downside area for us. What does it mean? It means we could tie very well to this potential buy. Why? Because if we're hitting this area of a short reversal for gold, so this is a tip, so tip of the month, and this is down to risk environment, which is the main driver when it comes to trading gold. A risk-off switch risk environment means all the money is fleeing risky investment, pouring it into gold. Gold is pumping, and it is driving the market, and as such, it is driving in pair. Now, if we tie up this to a potential big short area for gold, this could be the end push of the risk environment. Why? Because a lot of these investment taken away, put into gold, would have made money in such a big way that they'd be pulled back and going into risk investment again. And as such, if it ties up with the sell, that means gold could just dump really hard. And that would be very lovely, because if it ties up to something like this, which could be one of these two zones, will provide the pullback as gold is reversing. So for now, it is perfect in terms of linking, aligning everything together on the market. So I'm very confident in that kind of area there, and we'll see where we go and where the market goes, basically. Alright guys, so it's a disappointing turn of event. We missed, depending, well, the market missed us. So yeah, it's done the job. We've not been tagged in, so I'm going to be cancelling this zone now. Now, I would have an interest again on this type of zone based on what happened in the past. Breaking, retesting this zone, breaking, retesting this zone a couple of times. But I think I would see some further upside into this area there. Remember, we are bearish May. I want to focus on the short more than the buy, so I think it'll be slightly more risky to go again straight away on this area now. And as such, I think I'll be calling it a miss for now and move on. I'll show you what I meant by lining everything together. As you see, gold has tapped into the short area, and the risk off environment has switched back to not necessarily risk on, but has eased a bit, and as such you've seen a strong reversal on gold, and it matched the buy area. So lining things up, I've done a big video on YouTube, guys, so refer to this. It's called Take on a Mental. It's in 3 parts. It's a long explanation breakdown I've given you. All of this is free. All of this is knowledge I use on a daily basis to trade the market, guys. So we catch up next when something of interest comes, because nothing is really new for me at the minute. Alright guys, so quickly, what we could be looking at is possibly the 61 of this move down. So it's bearish May, and therefore I'm willing to take a bigger risk if it goes with the momentum. If we were to let me check the 4 hour. If you check the 4 hour there, we breach the 38 and the 50, and we go to the 61. Therefore, on this specific move, I'll be having an interest. I'll be having an interest on the 61 there. So if we have a look, what that gives us? It gives us this area there. That only works, as I said, if you push the 38 and the 50. If you get any reaction from the 38 or the 50, when I say reaction more than 50 pips, therefore I lose the profit-taking confidence on 61. So what that means for this specific trade, if 38 retraces to the 23 or the 50 retraces to the 38, I'll be losing interest on the 61. But I think it's got high odds, of working and possibly going further down. If you look at it, the size of this move, if we react to 61, could be the similar size going to this and then provide this buy. So we'll see where we go. I'm gonna keep an eye on it if I can, but this needs a lot of monitoring. We have seen a breach of the fib I was talking about last time. If you remember this, we breached the 38 and the 50, and we missed the 61, unfortunately. So that was a missed trade, and it did part of the move you'd expect from it, not the full move. It's only 35-40 pips retrace from it. So technically, it could still tap into it and make a bigger move. However, that would be now leading to Monday. And Monday momentum, if it was to push up, could be a one-way ticket. We know we favor the bearishness. We know we should be seeing some downside. However, like I said, Monday, I'm mostly going for strong confluences setup if I trade against the momentum. So it's likely a pass for now, and we're gonna refocus on what is next, is the possible buy that has now regained my interest. Why? Well, it's easy to understand why. Simply because we pushed 250 pips up, and therefore that makes me interested again. If you take a look similarly to what happened before, break retest area around there. So okay, it's not this one, but it was established here. First time round, we pushed 250 pips, exactly the same thing. So 250, we gone back into it, and pushed again and made a massive push. So why not seeing this and then make another massive push? We still favor the bearishness, okay? But remember, this is for the first 10 days, first couple of weeks of May. Then I do not have a bias toward any particular direction on GBP basically. So I will lose the bearishness view I've got for GJ if this whole thing happen on in May later on. Okay, so in a way, what we could be doing. Okay, this is the 10th, and this is mid-May. Mid-May, around there. Okay. Around this area there, I'd still prefer downside than upside, but past this, I don't have a direction, so it's no longer focusing on short, and we find getting onto a buy and holding on to the buy. We're no longer holding on to short forever if we also get a short. Okay, if I get a runner anyway, any side, I'm going to try to hold on to it, like I always try to do. But you get me, you know. Right now we lost the bigger picture that was bearish. But I haven't lost it yet, but we will lose it. So for now, this is full focus on this and this buy area. However, if this occurs Monday and we retest, I'm passing on this. I don't fancy it. If we retrace further down, say mid price action, which will be over 100 pips, I'll be interested in this again, and same I'm interested in this one again. One of the unlikely scenario, but would be perfect if we bounce back there, and then I couldn't care less what happened there. But I would get into the buy, I'll get into the sell. This will be done and dusted, and then we will be waiting the top sell or the bottom buy area, basically. So this is my next view on the market. I don't trade overly aggressive in between, especially when I don't have any reference and intra-key level. So at the minute, I'm waiting either for that buy again, break retest of the 168. This time, I'm gonna be very cautious. We missed the by peanuts, so I'm gonna go off the 0.10. Even might go from the 0.2 to not miss it in case we go there. And as for the short, I'll be doing the same. Usually I go 5 pips below my first conferences. I've just been a moron there and wasn't in 5 pips above the conferences. So mistake again. We live and learn. We all make mistakes. It's okay as long as we understand them and we make sure to not repeat them over and over and over and over. Okay, so these are my 2 next setup. For now, I pass on the short. If I do go for that short, that was for the explanation. No longer need these. If I go level, I'm gonna use the 0.5 and risk associated with this. We're gonna use the 61. Okay, 61, and just go above the 61 to make sure that we allow enough room for it. And target wise, let's check the target. So to check the target, we're simply going to look at the bull move there, and 38 is around there, and I want to pay attention to 38 in case. So I'm definitely not going lower than this, and combine that with this push and the 38 of this push. 38, 23, 38. So I've got 2 options: this or this one. So we could be going for split profit on this one, depending when we trigger on this. Basically, if it happens, I'm going to put it back. Yeah. Mid. If it happened before, we definitely go for the 38. If it happened after, we go for the 23, secure something, and maybe do a partial type of things, but definitely going for a more secure type of target. It will depend on the price action we get in between, because we might have some intra level that will develop, and then we will be using them as reference point. But for now, this trade doesn't even exist. It's not even a trade setup because we're too close from the price action. Okay, guys, so we catch up when one of these trigger or after more price action has unfolded. All right, guys, let's have a look at some charts. Let me check something. I'm just checking at news. I think it's heavy earlier on. A lot of Fed news on Monday. Some RBA meeting, the unemployment rate on Tuesday, some Euro GDP, CAD inflation, retail sales. Yeah, a fair few bit of news that's gonna affect earlier in the week, especially US dollar. So we'll have a look at the technical and see if anything ties up to some bit of fundamental. First of all, so what my next play would be for DJ. I'm gonna keep this zone of interest for sure. I'm gonna have a slight interest in this level around here. Small fib, we can 170 could have something of a small pullback based on the fact that there's 61 as well around there. Very small level, small break retest of this level. This is very day trading aggressive, but I'm just gonna highlight this. A breach of this could be good for me for the next level at 171. Round number have been working quite nicely lately, as we've seen. So where we at? So if we take into account the reaction there, and we look at the extension, we are bang on this kind of level. That's the level I've got my eyes on By that time, maybe this is going to be in if we get there. I'm not gonna go again at 168. It's been overdone. I don't fancy anything in between, so it's quite easy for GJ. This is gonna be some more waiting for me in terms of trading it. If you look at EJ, EJ has been done before, so it's likely to remain relevant. Similarly, we could look at the zone we've just made there. Possibly this is lined up with the 61 now, so that's decent level to be looking at. 38's got not my interest, neither the 50. This break retest kind of area remains for me. So we passed this zone. I do believe this has got, because it's what, 128 pip, it's got some slight potential there. That would be a case of lining things up for this, otherwise it's too light. Again, similarly to GJ, this is likely to be in play at some point there. And below that, I don't really know what I could be looking out for. So the main fib, 61. Don't know what we had there. This is our 61. This remains of interest. Previous low there. Still have the EMA into play. I don't have the SMA. I have to add it to see where it is. Where we are on weekly, monthly, nothing close by. And yeah, again, this, knowing that we've had a bigger one above, this is now amended to this. There we go. Yeah, not much. These have been weekly made, so I won't change much, since I'll send an updated chart as we go along. Where we at with this? We've been triggering the buy there, and I've updated the area of interest. Initially, we get the interest in the 61 around here. And straight away from the Monday we pushed deeper into the zone, and that has not had my interest. Remember, we had all the way until the 15th where I had no interest in this short area before, and as such I ignored this area. It delivered a pullback initially, then went deeper again, and then made this new move to the downside where we got triggered to a buy. Now we've got a runner left there. I have now got an interest not in the 61 area, but the intra level that has been made there. So it's a high risk trade, but we are not far away from a good area for potential short. And therefore, there's a couple of options available to us. We could be using the runner there to take this counter instead of the 25% risk. But the goal is to take high risk, so it's either, the question is either we use the runner there or we use the runner here. The way I see things, and the way I'm going to break it down to you, so when you have a runner, you facing the same situation, you understand. If we use the runner there, we are technically betting on this to fail. Okay? If this fails, this is a high probability trade. If it's a higher probability trade, you don't need that runner, because it's already a good order of success trade. So guess what I'm trying to say is, if you want to use a runner, you use it on a slightly lower probability trade that is still a good trade you would want to take. And as such, this is the area there, because if we lose the runner and it keeps going, we don't need it to take this trade. It's a good enough trade on its own. Okay, so the way we can do it, the question is more, how do we do it? We take the trade there to offset some of the risk of this area, or do we add the runner to increase and boost the trade? I think it's a question that is whether we want to be super aggressive or less aggressive. It's a high aggressive account, so I'm guessing we add the risk on top of the runner, basically. So it's either we use it to offset or we use it to add on top, and we're gonna add on top. So still gonna take the same risk there as usual, 25% risk, and then add more of the position based on the current runner that we've got, basically. Other than that, previous high has got my interest, or the lower area still from before, still have interest on this area. Okay, the one we broke down before. Other than that, I would be not interested in trading anything in between. I think that's overdone now. There's possibility of that 61 kind of. Show you something like this. Around 61, this small. This is minor. This is far-fetched. Yes, it's around the 170, sorry. But the 170 has smashed, worked, smash, maybe worked, maybe not. Odds of success are not high enough for me to go for such thing. If you wanted to be really aggressive, you'd be using the runner there and then taking this one and then this one. So it's another possibility to see things. Actually, from our position, it's 160, it's small. We could take the runner there and just, lose it if we lose it, and then take a normal trade there. I think I prefer this option there. So we take high risk, but calculated high risk. Yeah, so that's it for this pair at the minute. We'll update when we've got some more action and we have made either a sell or a buy, because it has to trigger one of these unless we stay in this range for quite some time. Alright guys, so where we at? So we've been triggered on this short area and it has blasted through the level and tagged into the higher sell, and that sell delivered the move. We also bounced on this one, and that runner has been lost on this area there. So let's talk about this area. What was preventable on this loss? If we take a look at the reaction we got here, we've seen a strong pullback prior to the area there. And if you take a look at the fib from the new low made here, you can see that it reacted from the 61. Now we've gone very aggressive and we had the runner to cover for it. But any reaction you got from the 61, which is in the vicinity of this area, should lead us to not go for this, as it's got lower odds of success. So I guess the point I'm trying to make here is, you guys, when you're looking for increased profitability, do not look for more trade or bigger profit on the trade, but try to take away the losses and the potential loss. And this is definitely a potential loss. Why? Because we are no longer bearish long term. Forget about this. We've had two reactions there, and we had a strong reaction on the 61 that led to a significant retracement. This is at lower odds of success. We are aggressive and we use the runner, but that loss could have been prevented. It's only because I'm okay and comfortable with stuff like this, because I've got a higher odds of success zone behind, and overall this is break even. But this should be a winner, and removing this will lead to increased profit. You see, it's not by looking for more trade, it's by removing the unnecessary losses. This would have been a profitable setup. We don't really care. Runner cover part of it. Overall, we BE and made a slight profit on this setup. No big deal, but just try to be consistent in the way you apply trade. I'll be consistent. I'll be going aggressive on all this type of setup. But if you try being consistent and avoid these lower odds of success type of trade, we're gonna lose many trades where you'll see some profit, yes, but you'll remove more losses. And removing more losses will lead to having more profit. That's it. So now what next? We still have the buy area around here. You could possibly look for another buy there, but that's lower odds of success. If I had a runner to cover for it, I would go for it, but I prefer this odds of success on this one. But now you see we have nothing there really for a short. So what we're gonna have to do, we're gonna have to dig deeper back in time, and we're gonna have to look at the weekly chart basically. So let me pull the weekly chart. So if you take a look at the weekly chart, again we see nothing on the 172 and above this area there. So we're gonna have to dig very deep and go back in time and check all of these. Alright, so what do we have above the 172? So I'm gonna mark these up. We've got this area there, and break retest there. It's a good level. This is the kind of level we want. So we use this reference and the latest price action, and that's how we're gonna define the zones there. So 174.8 around is going to be the first potential short. What you could be looking at, got nothing here, so we go slightly back in time, and you look at the area around there. This is another potential short level. Yeah, and you see how we do it. You see simply the case of checking all the potential level one by one. So you check, you see nothing, you go until you see a level of interest basically. There's some around there. Next big level is the 180. 180 is a big one. If we do this and go even deeper, we could look at what, because there's a big gap in between, we could see and have a look at what happened even before. So if we do this, I'm trying to see if there is more. Okay, here we go. So we've got some more price action around there. I guess I can have a look like this. And there is a lot more price action we can look at basically. What we could be doing, we could be going back in time. That's a very long time ago, and look at the daily, all of it, to just pinpoint a more accurate level, but one that is kind of obvious to me here is at 178. 178 is an obvious level. And I guess that'll give us all the level we need to go further up for a possible short. So now we're gonna go back on the daily. Okay, so see, we now have all our potential short area. So one here, one there. It's as simple as this, because we've got no further price action basically there, and all of these are susceptible to potential pullback. Now with all of these, what you're gonna do, you're gonna try to line up your market. So we are going to try to line up the market, EGA, AGA, other yen pair, and Nikkei. Nikkei is going to be a big one to see if you got any of these working with short-term or long-term potential. But these are all my next area of interest, and we'll cover them as we go along with the price action if you go and see upside. But the next one is near a 0.8. Near a 0.8, we take the entry based on 75, so something I will go around 75 for this level. No need to cover more than the 75 level. We go with the 0.2 actually. 0.2. Yes. Potential of a trade like this, well, it's a 0.8. It can retrace all the way to the 0.2. I use this conference. This conference is a lot. You notice 0.2, 0.8. So I'll go on the back of 0.2 around there, and I use 0.25 to make sure we're in and out. And this is simply my next setup because I have fuck all in between. So now this is a question of what do we see next, the upside or the downside. We're still very much bullish on the main long-term direction. If we take a look at this as well, super bullish. I guess it's a matter of time before we break it, but for now this is pretty sustainable as it seems. So a break of this will slow down the bullishness or even put an end to it, but at the minute we are very much bullish, and as such I think we're gonna go there more likely than there. So yeah, this is next for us in terms of where we go next, and yeah, we catch up when we see more price action. Alright guys, so this is now over. May is finished and we have survived the 5th month in May with the high risk. Unfortunately we missed the good trade there, or a good trade that would have ended up making the TP. For some reason we didn't get tagged into this, so this is a miss and won't be counted for as a win. However, this was the big miss of the week. It needed to be on the screen for this to be more proactive about trading, which I wasn't. This is a big miss. Break retest, as we've seen before. These big levels that have pulled back more than once, I've always given something on the break retest. Twice level, break, retest, level again and again. These levels have been working really well, and therefore as such this should really have been a buy we needed to be in. It might still offer another go, that's for further analysis, but we were not part of it. This ended up doing the TP. So month of May, a relatively quiet one in terms of opportunity for us. It had many for those really aggressive. Again, if you're looking at all these break retests, twice it worked there, and if you look at it, them break retest. So break retest is what we have to retain from the month of May. These late break retests on the every time you push to the upside, it's like a staircase basically, and it works pretty well. So we should pay more attention to it because at the minute this is working really well. So nonetheless, we have the first target there from this short we had, second target hit this month, and then we had the buy that worked pretty well. We left a runner that was used to cover part of this because this did not work, should have been avoided, but we took the L there, pretty big, partly covered, and this recouped. It was a small trade, recouped it all to be, so you pretty much only had these two trades, the short there and the buy there, which both were with extended target, whether in the form of runner or extended target. And that is 5 trade I did, 4 win, 1 L, 6 if you count the runner, so 5 win and 1 loss, and we now around the 76x mark, nearly there to the 6 figure. The pace we've been keeping for the past few months is pretty much doubling or almost doubling month on month, so the 100% return on a monthly basis, which is hardcore, but this is what you would expect when you trade with such a high risk. If you're not getting this kind of reward, it's not worth trading high risk. And this whole thing is to see if it's sustainable to trade high risk with a proper strategy. So far it is. I remind you that you can find all these play in the edit room. All of these play were available for our members. And if you want more analysis covering the whole market, because this is only GJ, I cover more than GJ, I cover GN, GA, gold, and silver. But if you want more of the market, check us out on our chart analysis service. Our analysts cover the whole market in depth and do offer trade management, ideas, opportunities, and Confluence file which break down the entire market twice a week. So check them out and check us out. So this is now done for the month of May. We're gonna move on and roll on to the month of June and see if we can survive another month and the last one. So comment below, are we going to survive June as well? Maybe, I don't know, extend to July. So did you expect a high risk to last that long? Did you expect it to be sustainable? Comment below and I'll catch up on the next video, guys.